Apple reported quarterly financial results after the stock markets closed in the US on Thursday, May 1st, 2025. They had disappointing numbers and the stock price is down almost 3% in the aftermarket hours following the earnings release. Of course, I warned investors coming into 2025 that I felt Apple's valuation was too expensive. There were too many headwinds and risks coming into the year, and I downgraded the stock to a hold, down from a buy where I had it in 2024. In 2025, I've had it rated as a hold all year long. So I'll let you know after reviewing the company's quarterly earnings results if I'm upgrading the stock, if I still think it's a hold, or if I think it's a buy. I'll let you know following the earnings review.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
And so Apple reported total net sales of $95.35 billion. That was better than I was expecting. That was up from $90.75 billion in the same quarter last year. Apple's struggling to generate sales growth, but in the last 2 quarters, it's done relatively well. For the 6 months that ended March 29th, 2025, its sales have jumped about $9.3 billion up to $219.66 billion. Now, one segment I was watching closely was the cost of sales in the product segment. Apple notoriously outsources its manufacturing and assembly to third parties in Taiwan, in China, and so the company's exposed to the tariffs. In fact, it's right at the epicenter of the increase in tariffs. I was pleased to see actually that their cost of sales in the products division only increased by less than 10%. It jumped to $44 billion, up from $42.4 billion in the same quarter last year. That's even though product sales were up by roughly $2 billion. So they sold more product in the quarter, but the cost of sales didn't jump by all that much. Now, this was for the quarter that ended March 29th, 2025. The company is likely to experience a bigger hit to its cost of sales in the upcoming quarter because that includes a full quarter of tariffs and the temporary jump in tariffs as a result of the big reciprocal tariff number placed on China. There's a lot of uncertainty around tariffs. Apple's received a product exclusion that excludes electronics, including smartphones, laptops, and others that Apple sells. And so that was a relief for Apple stock investors. That exclusion wasn't for Apple specifically, but for the product category generally. The company's operating income increased to $29.6 billion, up from $27.9 billion, as Apple did an excellent job keeping costs under control, even during an environment such that they faced in the most recent quarter. That's been one of the great selling points for Apple stock is their ability to keep costs under control while they generate either flat or slowly increasing sales in recent years. I also wanted to look at its sales in Greater China and see how the negative sentiment between the United States and China is impacting its sales in the region. And you're seeing the negative, but not that much. Sales in Greater China totaled $16 billion for Apple. That was down from $16.37 billion in the same quarter last year. So not a big decline. That was better than I was expecting. The good news for Apple is that the segment that grew the fastest was its services division. Revenue in that segment grew to $26.6 billion, up from $23.8 billion in the same quarter last year. And if we go back to the cost of sales, you can see that services segment revenue generates a much better profit margin. If you divide the services cost of sales at $6.4 billion by the services revenue of $26.6 billion, you can see that the costs are a relatively small percentage of the overall sales. In fact, Apple always says that they expect the services division to generate a gross profit margin around 70%, whereas the product division generates a gross margin around 30%, 34% at the most. And so when the services division is growing faster than the business overall, that's generating an expanding operating profit margin for the business overall. All right, so now that we looked at the company's earnings results, let's look at valuation. And this was the primary reason why I had the stock rated as a hold coming into 2025, because I felt the valuation was stretched. And I think I still feel that way. The intrinsic value per share at $175 compares unfavorably to the current market price of $213. Now, my spreadsheet doesn't update for aftermarket hours, so if we were to account for the 3% decline in the aftermarket hours, the stock is trading at around $206 a share. It would still look overvalued according to this valuation metric. So, Apple stock still looks overvalued, and they're heading into an environment with increasing uncertainty about how to navigate these waters, increasing tariffs, geopolitical tensions, a so result in artificial intelligence for Apple. They talked about how their artificial intelligence developments have not gone as well as they were hoping for. And so all of these lead me to still be neutral on Apple, not very bullish at all on Apple stock. So, to update the recommendation, as I said, coming into the quarterly earnings release, I had Apple stock rated as a hold. And following my review of the company's earnings release, I'm keeping Apple stock rated as a hold. And I updated that on May 1st, 2025. Now, there's a lot of factors that could cause Apple stock price to soar, and there are factors that could cause Apple stock price to crash. For instance, we've heard reports coming out of the US president administration about a potential deal with India. Well, Apple has a lot of manufacturing presence in India. If there were to be a deal with India that reduces the tariffs that Apple has to pay from products imported from India, that could be a big positive, and Apple can shift more of its manufacturing to that region and help offset the impacts of tariffs towards China. Furthermore, if there was the granddaddy of all trade deals between the United States and China that removes that 145% tariff plus other tariffs, that could also be a big positive for Apple stock. So it's in a very volatile, very risky situation, and the valuation is stretched. So I would just rate this stock as a hold. Wait for more information before making a decision here. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.